Good morning and welcome to this weekly market update from MRC Markets. Today is the 30th of July 2012. What we'll do today is slightly review last week, give some sort of outlook into markets this week, basically just going through technical analysis, so have a little look at the weekly chart, daily, 4 hour, maybe even hour as well. Looking through euro, dollar, cable, dollar Swiss, dollar yen and gold. For any new followers, there is 3 moving averages on each of these charts. The red one is a 55 simple moving average, the purple is a 100 simple moving average, and the gold is a 200 simple moving average. We're not going to make any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website www.mrcmarkets.com. Okay, let's have a look at euro dollar. This is the weekly chart. First thing, I mean, we won't spend too much time on the weekly because it's not a massively interesting chart in my opinion. And the key level is all about 2010 low, which is a 1.18, 1.1882. It is looking like it's wanting to come down, but it looks like we're going to get a slight retracement. If you look at last week's candle, we had a very bullish candle, bullish engulfing, mainly due to ECB President Draghi coming out and saying that he'll do everything he can to save the euro. I haven't heard that one before. It's just amazing what some of these guys actually come out with just to move the euro up. There's no sort of substance in that whatsoever. But hey, it moves the markets. This is what you have to be aware of. All these the European bureaucrats, when they come out and say stuff, you need to be aware of what they're saying, because it does affect the market. We literally got a 100 pip rally from that, and I think we had Merkel over the weekend saying a similar sort of thing. So do be careful. But yeah, anyway, in terms of the technicals, we won't dwell too much on the fundamentals. We like to focus on the technicals here. Last week's candle was a bullish engulfing, so automatically just from the weekly it looks like it's going to have some sort of retracement towards the upside this week. I mean, in terms of moving averages, we're still miles away from the moving averages. The 55-week moving average stands at 1.3278 currently. Let's flip it to the daily. I mean, as you can see, the last sort of 4 daily candles, I mean, well, Sunday's one's obviously a very small candle, but we have 3 very bullish candles indeed on euro dollar. So, and we're now looking like we want to come up and test this 55-day moving average. So the weekly, we're looking at the 55 weekly, and the daily looking at the 55-day moving average. That moving average stands at 1.2431, so we're still a long way away from that. But would not be surprised if we saw that be tested this week on the sort of retracement that's looking like it's wanting to do this week. I mean, let's look at the 4 hours. Any sort of buying opportunities that people will be looking at will be from the lows here. Okay, so on all the charts here, on the lows and the daily, the 4 hour, flip it to the hour, fib from the lows to the highs. Just need to change the settings here so we can see, because it's just come up in yellow. Let's get rid of 23.6. We don't like to use that too much on there. So yeah, in terms of, let's just stick it up a bit as well. In terms of the fibs, any sort of, I mean, the 3 fibs are preferred to. I mean, I ideally like to see some sort of retracement down to the 50% on 61.8, as I think it's good to get a nice sort of healthier retracement. But the 38.2 is a perfectly good level. You can see in this 1 hour chart that the 55 bar moving average is very near euro dollar currently. But in terms of the fibs, we have the 38.2. Sorry, I'll just put the levels on there as well as a little trick so you can see what the prices are of these. And there you go, the levels pop up. So the 38.2 stands at 1.2254, the 50% stands at 1.2213, and the 61.8 stands at 1.2173. So there's the sort of 3 fib levels. If we do get any sort of retracement, further retracement, It looks like it's starting to pop up already actually in today. Those would be the 3 levels to look at, and if we get the break of, to get any more further upside, we of course need to break these highs up here at the 1 spot 23.85. So if we get any upside momentum, it's all about the 1 spot 23.85 that we need to break to get above, so we can test that 55-day moving average, which is currently at 1 spot 24.27. Okay, let's have a look at the cable chart. Let's have a brief look at the weekly chart. We're still in this this triangle formation on the cable. I should change the colour of that. Yes, we're still playing inside this triangle formation on the weekly cable chart. You see a few weeks ago we had that nice bounce. Similar to euro dollar, a nice bullish candle, very bullish candle. But you can see on the weekly, around these moving averages here, 200 week moving average it's sitting at the minute. It briefly broke that last week, but it came out and closed below. So this week's candle is already testing it, and it's come down as well. So it's acting as resistance currently. So if we're going to get any sort of momentum to the upside on the weekly, then we need to break above that 200-day moving average. But then you can see we've got the 200 week moving average. But then you can see we also got the 55 week and the 100 week around here as well. So there's a lot of resistance to get above there on that weekly chart. In terms of the daily, you can see we've made 3 lower highs, higher lows, sorry, on this daily chart. So a nice trendline support that you've got there. And in terms of the fibs, if we draw a fib on the daily from the high to the low there, you can see that the 50% is the kind of, well, we spoke about this before, at the 1 spot 57.83. That's the kind of acting as the ceiling currently. We had that spike there, just fell just shy of it, and also around here, but you can see the 100-day moving average acted as very nice resistance on this cable chart. And we're also sitting around the 200-day moving average as well. So if we want to get any sort of bias, any momentum to the upside, then we need to break above that 100-day moving average, and then that 50% level. There is quite a lot of resistance around that area, but it is making higher lows. So what a lot of people, I would assume, will be trading it is off this trend line, and looking for any sort of bounces off of this trend line. You can flip it to the 4-hour chart, and you can see that much clearer that we've got a nice trend line support there on that shorter term time frame. And of course you can flip it to the 1 hour, and if you want to for any sort of earlier buying opportunities, you can use the fibs, drop from the low to the high there, and see what happens around the 38.2, which is also the 55 bar moving average is sitting just above that as well. But a safer bet will be to play it off that trendline support, in my opinion. Let's have a look at dollar Swiss on the weekly chart. First thing I draw would be this trendline support. You can see that playing out very nicely. In terms of the weekly, you got that 200 week moving average up there, which is above the parity level at 1 spot 0053, but nothing massive in interest in terms of the weekly really. So let's flip it to the shorter time frame. It's just neaten up that trend line a bit. So on the daily, you can see we've got a nice trend line support and 55-day moving average coinciding here. And then, so I mean, for any sort of dip buyers, they'll most probably be playing the fib from the bounce of the trendline support here. So from those lows to the highs, and you can see a nice bounce off the 50% Fibonacci retracement. But what's capping it is the 38.2. So you can see sort of previous support levels can act as resistance. And if you look to the left here, you can see how this previous highs around here are kind of coincide. Pardon me there. Previous highs are now acting as resistance as well. So if we're going to get any sort of more momentum towards the upside, then we need to break above this 38.2 as it is acting as resistance currently. You can see it in the current action of this daily candle already. But yeah, if we're going to get any momentum to the downside, then we need to break this trend line support really on the daily. have a brief look at dollar yen. In terms of the weekly, nothing massively of interest. Quite choppy really, just in between the 100-week moving average and the 55. We have kind of broken below that now, but you see we had this fake out before, so nothing massively interesting on the weekly. Let's flip it to a shorter term time frame. Initial thing I look at is the first thing that comes to mind will be this trend line support around here, and then we have the trend line resistance at the top here. So you can see we're just playing pretty much inside this triangle formation, so it's pretty much a case of buy the dips of the trend line support and then sell into any strength off this trend line resistance. Really, only sort of interest I'd have really on that chart. I mean, if you flip it to the shorter term time frame, then you can look at if you want to get an earlier sell opportunity, they can draw a fib from the highs of the trend line resistance to the lows. But you can see we just got short, just shy of that 38.2 there. So only real bit of interest would be on this daily chart really, and just see what happens. If you want to look, well, if you're going to get any sort of momentum to the downside, then we need to break below the trend line support, and any momentum towards the upside, we need to break this trend line resistance. But yeah, the triangle formation would be anything the key interest really for me on this dollar yen chart. That's the forex done. Let's have a look at gold on this weekly chart. The first thing that comes into mind would be this trend line support on the weekly, which is also coinciding with the 100-week moving average around here. We've spoken about multiple times in the last sort of few weeks about this 1560s level. Zoom in a bit. Yeah, so just below those candlesticks there, 1560s, a superb support level. You can see we've failed, well, multiple times we've tested this this support line, broken below, but then the candlestick body is closed above the 1560s. So we said any momentum towards the downside, you'll need a weekly candlestick closed below those 1560s, and until then it's still in a bullish uptrend. And this is the case really, and we finally had some sort of clear bullish breakout really. And last week's weekly candle is a very strong reversal candle and also a bullish candle as well. So it's looking like we could get some strong upside momentum on gold this week. So the first sort of weekly target would be this 55-week moving average, which stands at 1673. Is there anything more interesting on the daily chart? Where we can draw resistance around here. We haven't had a daily candlestick close above for a while, and you can see this is the current resistance, and that stands at 1628. Well, you can put it to 1630 if you prefer your rounder numbers. So yeah, it's all about 1560s and 1630 really on this daily chart. If we get, but it looks like that we want to get some more upside momentum this week. But if we're going to get that, then we need to break above that 1630s, and then you got the 200-day moving average there, which is at 1645. But no, it's a very, very technical chart, gold, especially on that weekly. You can see it's been playing out very technically indeed, and to shorten up on the short-term time frames. I mean, you could look at some sort of buying opportunities in terms of fibs from if we get any further retracement from the draw from the lows to highs. There you have the 38.2 standing at around the 1604. I'd expect a lot of buyers to come in at the 1600 handle for sure. Okay, that's the charts done. Let's have a look at the forex calendar. What have we already had out today on the Monday morning? We had Spanish flash GDP numbers coming out expected at minus 0.4%, so not pretty numbers there from Spain. Tomorrow, headline data out of Canada is Canada GDP month on month, forecast at 0.2%. At 3 PM we have the US CB consumer confidence numbers forecast there at 61.5. On Wednesday at 8:15 AM UK time we have Spanish manufacturing PMI. At 9:30 we have UK manufacturing PMI, and at 1:15 we have the US ADP non-farm employment change numbers expected at 122,000, and at 3 PM we have the US ISM manufacturing PMI data, very important bit of data that. That's forecasted at 50.4. And in the evening at 7:15 we have the US FOMC statement, so keep an eye out on that. On Thursday we have some overnight Aussie data 8:15 we have Swiss retail sales. At 9:30 a.m. we have UK construction PMI data, the forecast at 48.3. 12 p.m. we have some more central bank stuff going on. We have the asset purchase facility out of the UK, the official bank rate, and of course MPC rate statement. And at 12:45 we have the Eurozone version of that, so we have the minimum bid rate coming out. We have ECB press conference as well. What will Draghi be saying? Anything furthermore from his comments last week? And at 1:30 we have US weekly jobless claims forecast at 375,000. And on Friday we have some more high impact data here. 9:30 UK services PMI. But the headline of the day and the week and the month is of course the US non-farm employment change data. Always comes out the first Friday of each month. That's forecasting at 101,000, so we're still well below the 200,000 there. We're expecting some slightly better numbers from the previous month's shocker of 80,000, so we're looking to get above this 100,000 number. And of course what comes out at the same time is the US unemployment rate, which is still now at 8.2%. And to finish off the week we have some more high impact news. That's US ISM non-manufacturing PMI data out at 3 p.m, forecast at 52.2. So a lot of high impact news this week, so keep an eye out on your charts because it will have an effect on the markets. Okay, that's all for today. Hope you enjoyed this video. Have a great week trading, and I'll catch you next week. Thanks for listening.